Happy Friday, traders. It is 8 a.m. on Friday, the 15th of February, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight session gave us China GDP and several other releases. Nothing that was earth-shattering. We also got the Eurozone trade balance and several other things. Overall, the China GDP came in at 6.7 year on year in line. It's a 7-year low. And in general, the market is slightly lower to flat. Oil being worst off, it's down 2.63% or $1.10, $1.09 at trading at 40.40. Remember, this weekend brings us the Doha meeting where there was a discussion from OPEC members to freeze oil production. The big caveat for that Doha meeting is Saudi Arabia saying that it will not participate in any freezes unless Iran comes to the table, and Iran has already declared that it'll not be present and it's not interested in an oil freeze until it reaches a level of production that was pre-sanctions. So the expectation for oil after this weekend, and I'm going to be on Sunday night watching carefully. The expectation for oil is that they would likely set another meeting and kick the can down the road, and not much is likely to take place. Now, the discussion between Russia and Saudi Arabia that was rumored on Tuesday, which caused a strong pop higher, has not been refuted by Saudi Arabia. They haven't actually commented on it at all. And so to me, that leads me to believe that there is a conversation going on, and that's caused crude to jump up this week for a good portion of the week. And so that's what we're seeing. That's driving things right now. Again, crude being the worst off right now, with the DAX following in its heels, down 35.5 points. The other indices, the Euro stocks, Russell, NASDAQ, Dow, and so on, are all down, but only slightly. And then we see money moving to safety today. Money is going into gold, which is up 0.44% or $5.30 at 1231.80. The Japanese yen, the U.S. Treasury bond, the Bund, the euro, and the notes are all positive. So the overall market sentiment based on the overnight session is that of a risk-averse position. Let's start out by let's look at what we have on deck today. We got U.S. Empire Manufacturing. We're looking for industrial production month on month in about 10 minutes. Expecting negative 0.1. We're looking for cap utilization, expecting 75.3. Where the big number today is at 9 Central, 10 Eastern, a half hour after the open. We're looking for University of Michigan confidence. This is the prelim number, so it's a high-tier number, expecting 92 for April. 92, and then later today at noon we get the Baker Hughes rig count. The previous was 443, no estimate. And then at 3 o'clock Central, 4 Eastern, right at the cash close, we get total net tick flows and long-term tick flows. That is a measure of money coming in and out of the U.S. As far as speakers, and don't forget we are in earnings, in the earnings season. Citibank announced this morning it came in at $1.10 versus $1.04 expected, and 17.6 billion in revenue versus 17.8 expected. So they came up a little bit short. But later at 11:30 Central, 12:30 Eastern, we get Fed Speaker Evans is speaking on the economy and policy. So the expectation is that the market's likely to pay attention here. Once that takes place. I don't see any major earnings after the market, so we'll move on from here. Let's start out as always with the review of what was expected yesterday from yesterday's pre-market trader bite. Again, you can always grab these on youtube.com. Just look for Futures Trader 71. You'll find the channel and you'll be able to watch it or review it. So yesterday we were during the trader bite, we were trading at 2078. The expectation is we would open just inside of Wednesday's range or just outside of Wednesday's range. In either case, we expected an open auction in or out of range. Those two distinctions have different habits, different expectations, just slightly different expectations. But overall, the expected primary, this is the primary, this would be the primary hypothesis right here. The overall expectation is that it would drop into the prior day's range. The first test would be value high right here, just on the edge of the gray area. The gray area on the profile shows value high being approximately 2073. And then the expectation is for it to to form some consolidation and push up and into the 80s. I didn't know where it would end up, but I expected it to be in the 80s as it pushed higher. The secondary expectation was the same thing, a test early on, a test higher early on, and then for it to dip down into the value high, try to bounce out of range, continue down to the point of control, and then continue down to the gap. This would have been the better trade opportunity for the day session, but it's a lower probability. That's why it's called Hypo 2. And then Hypo 3 was a quick bounce off of the high volume node, the point of control up here, the overnight point of control, and then a trend day up in continuation of what we've had so far. Again, that conclusion comes from the amount of consolidation that occurred, that took place down here, fueling a continuation higher towards that 2100 all-time high. What we ended up getting is Hypo 1, almost exactly. Hypo 1, here it is. We did not get an open auction though. It ended up being an open rejection reverse. It opened, tried to continue in the prior direction, and then we have a rejected reversal, small drive down. We see it here in the delta, and then it pushed right past the value high by just 5 ticks, and then it drifted back up, pulls back in, and it just sat sideways. That's very similar to what we saw here for Hypo 1. So as far as I'm concerned, Hypo 1 did not have the continuation. I expected a continuation higher. It ended up pushing higher up here into the 80s as expected, but overall it was pretty dead. It was a very dead trade yesterday afternoon. It was actually pretty awful. This is a very tight consolidation here, which tells us that we're likely to start shifting into an imbalance potentially today. So with that being said, the analysis right now is to take these 2 days and put them together as discussed in yesterday's AMA. If you did not attend the AMA yesterday, by the way, it has been posted to YouTube. It's on Twitter. If you're a follower, I suggest you look at it. We answered about 20 or 21 questions, and all of them I think are very relevant to most traders. But here's the 2-day consolidation. You can see that there's some heavy volume here on the HVN on Wednesday. Then we have the point of control right against it yesterday. This is essentially right on the edge of balance. It didn't quite close in balance here. I did expect it to drop yesterday. It had all the ingredients of a nice little drop to go neutral on the day and potentially put this top in and leave it in for a while. The taper on the volume, see, this is a beautiful taper on the volume. As prices auctioned higher, there was less and less interest in trading at those prices. This is not a weak high. Look at that taper. It's just just a classic taper. This shows us that this high is fairly strong, was fairly strong, and once it fell through and pushed back into the range and consolidated, the expectation was, and I think I mentioned this during the AMA at about 1 o'clock Central to Eastern, um, that it's likely to use this energy to move down and push lower, make this day neutral, and then start the process of coming down into the 61 and a quarter gap zone, gap mid. That's what I was hoping for today, to be honest. That is, like I said yesterday, Hypo 2 is the better trade for day trading. But it had a low probability and it didn't play out. But maybe today has a better opportunity. Let's look at the overnight. The overnight, very dull overnight. B-shaped profile. Here it is. Got your B-shaped profile, and again, a very classic auction going on here. Even though there's a lot that traded up here, there was no volume that went with it. The volume for the session is listed right there, 176,000. It's about 100,000 less than what we've been having recently. So you can see recently 273, 293. Before that, it was 300 and something. 176,000. There was very little participation. I wouldn't be surprised if there was a holiday somewhere as a result of as a cause for this drop. But overall, the low is pretty weak. The low is pretty weak. The low is at 2071. We still have room down into the 2068.50 point of control, which remains naked on the day session. So the expectation overall is that this is not likely to find its way higher this morning. It is likely to continue to drift down. So the primary hypothesis here, is we open again in an open auction. The expectation is it's likely to attempt to find sellers higher. I'm looking for a test of 2075.50, the MC point of control in the immediate area. Again, that's based on this. And then with a backup up at 2076 and a quarter, and then I'm looking for the overnight low to break, the overnight low stat or the overnight stat to break on the low side, main target being 68. It would be beautiful if it pushed to this 76 quarter, 76 area down to 68. That gives us 8 points of tradable range, and that would be the ideal setup for this morning and the probable setup given the opening location, given the point of control, given the B-shaped profile overnight, and the fact that there's a fair amount of energy. Not great. The overnight volume, as I said, is lower than normal. There's less participation, but a push into the overnight low is expected to squeeze a good sum of traders, good sum of longs out, and continue the long liquidation, which is what a B-shaped profile indicates as long liquidation. So that's the primary hypothesis right there. The secondary hypothesis is an open auction. Test lower first. If the market tests lower first and pops back into the prior day's range, then it's likely to go up to the 76 quarter point of control, and then the target becomes that 78.50, 78.75 value area high. This would be hypothesis number 2. Okay, so those are the two main trade ideas for the day. I'm going to remind you again that it is Friday. It is the end of the week. It's been a fairly busy week, and it is just a good time, a good day to just kind of chill out, get yourself ready for the weekend, relax, be picky about the setups that you take today. It pays off in the long run to be patient. Let the market come to you. I know that sounds vague, and I need to elaborate on that, but I don't have time to do that. Just let the market play its thing and come to the setups that you have if it wishes to do so. If it does not, then you don't have trades, and at least you don't lose money, or there's a lower probability of you losing money. Have a fantastic weekend. It's going to be 70 degrees here in Chicago. Spring is finally here. It's beautiful. I hope you enjoy it. Take care.